Hey everybody, Chris Johnson with Monument Traders Alliance. I've got my master's green on. I'm ready to watch some golf, but we've got to talk about NVIDIA first. The stock has broken a trading range it held for more than 5 months, and it's starting to point towards some negative momentum that's going to take the stock price lower. When you combine that with a death cross or a pending death cross and a shift in the seasonality around NVIDIA's earnings and a June surprise, and we say blank surprise all the time, but I mean it. This is something the market has never seen. When you combine all of this, it's no wonder the options market is positioning for lower prices. I'm going to walk you through all of that, including how the options market is targeting a lower price, what that price is, and how you can mimic them, how you can make money on that downside risk. All of that in 10 or 15 minutes. It's going to be worth your time. You'll be a better investor for it. Let's jump into it. All right, like I said, let's jump into it. 5 or 10 minutes, maybe even a few more than that, but it's going to be worth it because I'm going to walk you through 4 or 5 things you need to be watching on NVIDIA and why it's targeting a lower price, as well as how you can hedge that and you don't have to be an options trader. I've got a solution for the people that don't trade options. Let's run through those reasons right now, though, why I see a lower price. And I'll just give it to you right now, $155. It's not only what I think, it's where the price charts are leading. It's also where the options market is actually betting on the stock going right now. Why is that? It's because we've seen a tough technical challenge and it's not going to get easier. Yeah, earnings and some positive seasonalities coming the stock's way, but I've got some information on that you need to know as well. First of all, we'll start by looking at the technicals though. We've seen what I call a wide and wild range right now. It's been between $195 and $175. That's gone on for 5 months. But it's just starting to give way and shift lower by $20. And there's a pattern in the chart that tells you exactly why. We've seen pressure from 2 key technical trend lines, and we've also got what we call a death cross forming on the stock. I'm going to show you that as well. Let's just get to that right now, because that is what's pressuring right now from a price perspective NVIDIA stock. Here we've got a price, and this is over the last 6 months or so on NVIDIA. We see the highs that we got up around that $210 price mark, and that was back in October, early November. And now we see the price of the stock trading right around that $185. Note this big rally today that we're seeing after a ceasefire announcement in Iran. That's kind of giving a little bit of boost to NVIDIA, but I've got a question about that. We'll look at the live chart in just a second. But what I want you to notice here is that for the last 5 months, you've had $195 as that top or that glass ceiling for the stock, and then we've had $175 that's been the bottom of that trading range, right? If you bought the stock every time it touched down at $175, you're pretty happy because it made a run up towards that $190 to $195 level, and whenever it touched that or got very close, simply sold it, and you're bagging $20 for every move, right? But look at this shift. So you've got a $20 shift in that range that's moved lower. And it's because of this pattern right here. Notice these lower highs. And even now, you've got a lower high and these lower lows. That tells you that you're starting to break that momentum. That stride on NVIDIA stock is starting to slow down right now. Investors aren't as anxious about jumping in. And that also shows this 50-day moving average. That's the green line. It's kind of wavering and heading into a little bit of a bearish trend. Whenever stock's 50-day is trending lower, usually about a 67% chance the stock's going to close lower day after day as long as it holds that trend. But here's the other thing. That 200-day moving average, the blue line, that is one of those widely watched trend lines. They talk about it in all the Wall Street media venues like CNBC, the Wall Street Journal, Barron's, etc. You'll hear people talking about the 50 and the 200-day. Well, both of those are in play on NVIDIA, and they're about to form what we call a death cross. So before we look at that, now you've got a new trading range. It's at 185 to 165. So literally it's shifted down by $20 from 195 and 175 to 185 and 165. And it's going to continue moving lower till we see it at 175 and 155. And that's going to be the time you want to start thinking about buying. Right now, I think you still wait it out. Let's look at, I said I'd look at the live chart. Let's look at what's going on right now, because I mentioned that death cross. Right here is today's rally. And we're seeing the stock trade a little over 2% higher right now. The rest of the market's trying to go up more than 3%. NVIDIA is lagging. That's another chart we'll look at in a second. But notice how it is abiding that pressure at the 50-day moving average. So if I zoom in here and look at this on an intraday basis, we gapped higher right there. And right now we're bumping up against that 50-day. And look, the 200-day moving average is actually giving support for the stock when it tried to move lower. This is why you watch these two trend lines, the 50 and the 200-day. Now, we break right back down below that 200-day moving average. That's right around $180. And you're going to see us start to challenge at 175 and then down to 170, 165, etc. But let's look. When these two cross, think of this as kind of like a third rail situation. When that 50-day goes below the 200-day, it tells you that momentum is favoring the bears. 4 to 6 weeks out, you usually look for a breakdown in the stock, and that's the time to start looking to buy. Now, it happened with NVIDIA. Let's go and look when. If I just compress this chart down for you, take a look and go back right here, and we get down into 2024, right? We saw that March and April period where the stock was actually pulling back, and right there is your death cross. We had it in March of 2024, and from there the stock went down into that April low, and it was about a 27% pullback before we saw the stock do a little bit of a double bottom and start to turn. Notice that 50 days going down, negative. There's your death cross. And then we see the stock recover from that, and it was time to go out and buy NVIDIA. A very similar chart. And look at where it's happening at about the same time of year. So a little bit of a seasonality feeling to this. So that gives me a great segue to go and look at what happens seasonally. I mentioned that there's some relative strength issues with the stock. This is what I'm talking about. Lack of leadership from this AI leader. We've seen some diversification in the semiconductor sector industry. We're seeing names like Intel that are popping up. If you look at Intel, that is a stock that I favor over NVIDIA right now for obvious reasons in terms of the turnaround that we're seeing and the reasons for that turnaround. But here is the relative strength chart of NVIDIA versus the semiconductor ETF, the XSD shares. Notice how we saw this rally all the way through 2024 and then peak out right around July of 2025. What that tells you is that NVIDIA was going up faster than the rest of the industry stocks. So it was outperforming the semiconductor sector. That turned around in July and has been heading lower. So now you have a situation where the other semiconductor stocks are providing better returns than NVIDIA. It's losing its mojo, just to put it into common sense terms, right? So that relative strength, leadership, or lack thereof, or that deterioration of it, leads to more selling pressure over time because people realize, hey, NVIDIA is not the superstar that it once was. A little bit of this is because of expectations. Everybody's got a higher bar for NVIDIA. And frankly, it's saturated with buyers. When you look at Wall Street, 93% of the analysts that recommend the stock recommend it as a buy or a strong buy. You've got very few bears in the stock. And that just tells you there's too much optimism in the stock and it needs to be set back down or reset. I mentioned the seasonality shift, and this is very interesting. We've got earnings that are going to be coming up in late May. And with NVIDIA, it has been a resounding bump for the stock. When we look at the last 20 years for NVIDIA stock, you can notice the months where we see earnings, right? 9.5% is the average return that you see in the month of May. And the stock is up almost 80% of the time, 79% to be exact. So in other words, if you bought NVIDIA May 1st and held it through the 31st or into the beginning of June, you could expect on average that you'd see a return of 9.5%. And that is all because this is one of those stocks that everybody loves to buy the rumor on. We've seen it. If I go back to that chart, we've seen it ahead of all of those big earnings announcements for the stock. And in many cases, we've seen the stock sell off after those earnings come through. So in other words, people are bidding the stock higher into the earnings announcement. And we see Jensen Huang come out and say, hey, we had a great quarter again, and I'm going to look forward and update and say, we're going to see a better quarter next quarter and next year perhaps. But the market continues to increase its expectations. And what's that mean? Well, it means that it's going to lose a little bit of its ability to outperform the market. And what I mean by that is when we see those expectations go so high, we start to see more of the sell the news. And that's exactly what's happened here. What you're looking at is a chart of NVIDIA and its 2-week returns after each earnings report for the last 5 years. Notice that we had these huge returns, 30%, 18%, 10%, 16% after earnings. But notice how this trend has changed now. And we're actually seeing more negative. Even though they're still beating their earnings mark, the expectations are simply too high. So we start to see more of a sell the news reaction to earnings than we see follow through when people are buying into that earnings report. And it turns out that now you see the stock, it used to be around 68% a win rate. Now it's down to 54% over the last 5 years. And you lose 6.8% of the time when the stock is down, and your anytime return is just 3%. It is just not performing. That silver lining of the seasonality has now shifted, and it's not favoring the bears. I wouldn't come out and say that you have to be bearish, but just understand that 9.5% return that we see typically after earnings in terms of the seasonality is now being dropped on a year-by-year basis, and that shows up right there in that trend in that chart. So there might be something better on the horizon that could trigger increased selling. And it sounds vague because it is. We've never seen anything like this before. And when I say that, I really do mean it. It's one of those things that typically feel like a little P.T. Barnum moment. But we've got SpaceX coming in June. What does that have anything to do with NVIDIA? Well, it brings this wrinkle that the market's never really had to deal with from a retail perspective. SpaceX is offering 30% of the allocation that's coming to market in that IPO to retail investors. Normally, we only see 5 to 10% of an IPO that gets allocated to you and me, right? We don't get the opportunity to buy it. And that's why you see this crazy activity on those IPO days. We're still going to see it because a lot of people want into the stock. But that large allocation means that there will be more shares available to us, which means that retail investors are likely going to be rebalancing their portfolios so they can generate cash to invest in SpaceX. I know it sounds a little crazy, but expect that to be a pressure, not only on NVIDIA, but some of these stocks like Palantir that have just been these darlings in terms of performance. Well, guess what? Palantir is down 30% from its highs. NVIDIA is down in the 20% right now, right? These stocks are not performing as they had been last year, and a lot of investors are actually asking questions about AI and adoption and what's going to happen over the next year. Just look at CRM, Salesforce, look at ServiceNow, IBM, a number of these companies right now that have to do with AI. A lot of questionable activity, and it's because investors are wondering if we bid these too high. This is a perfect opportunity for them to look for something that's a little more speculative, a little bit unknown, but it gives them those returns like they were used to seeing with NVIDIA 3 years ago and 4 years ago and 5 years ago. For that reason, expect that lack of leadership that I've talked about a couple times is going to put a little more pressure on the stock because people are going to be looking for alpha. They're going to be looking for that performance that they want to see like they saw from NVIDIA years ago. It's a weird wrinkle that's out there for NVIDIA, but I think it is going to put a little more pressure on the stock. And as a result, we're seeing the option market start to actually position for another 10 to 15% decline. Not necessarily because of what I said about SpaceX, but because of what we see overall in the market right now for NVIDIA. Those technicals breaking down, the earnings reaction starting to point a little more negatively, and you get a buildup of put open interest that now shifts lower for NVIDIA. So in other words, The options market, those that are speculating on the price of NVIDIA, they start to look for the stock to move. In this case, all of that open interest, the peak is at 160, and then conveniently at 150. Those are the two prices that you look for in terms of support on NVIDIA, but it also turns into the target in terms of where the stock is going to go over the next couple of months. Expect to see this, and this is right now the April expiration, and if we look forward to the May expiration, it's similar. You can see it down here around the 140. Right there's your 140 strike, 150, and then there's your 160. This is a lot of put open interest down there, and it tells you that investors are starting to position themselves for lower prices. So when we put that all together, and I mentioned earlier, that $155 level, that's kind of a little bit of a magic line for the stock, and it's because of this. When we look at the monthly chart for NVIDIA, in this case, look back here. The 20-month moving average is the line of demarcation for this stock between a bull and bear mark. So the technicians look at the 20-month and say, cross this line and we're in some real trouble. Look what happened last April when we hit that line. We saw investors come in and start to buy the stock up, and a lot of 20 months got touched last April. Well, guess what? We pull back right now to that 20-month moving average, and you'll have the similar reaction. And look at how far down it is. 15%, 14%. That's where I get that forecast of 10 to 15% lower, and why I start to protect myself and target that $155 level, the same way that the options market is. So we've put all of that together. Seasonality right now is starting to look and say we might have some weakness, or we should have some weakness, because sell the news has been the situation that you see in NVIDIA. That puts pressure on the seasonality. The trends are shifting lower. That trading range is now lower. The options market is looking for lower prices, and SpaceX might put some pressure on NVIDIA and other leaders as investors look for something new. So what's an investor to do? Well, I put this into my 3-month strategy. Right now, you look and say, it's got to take out the 185 to the upside in order to start picking up the pieces and move higher. We're seeing that pressure become very clear when we look at that daily chart today and say, all right, the stock should have a little bit of a tailwind and drive us higher. But man, look at how decisive that $185 level was. It just rejected the stock right down to its 50-day moving average. That's why I concern myself about what's going on with NVIDIA over the next 3 months. So failure to do so, break above that 185, puts us in a situation where we test 165 within the next few weeks on any increase in volatility. We've seen the VIX pullback, all of these things on the ceasefire agreement, but if anything comes into question, 165 gets tested very quickly, and a break below that 165 gives you a quick shot down to $155. And here, that's that bear market line in the sand, by the way. Here are the two ways that you protect yourself. I told you don't need to be an options trader. That's because they have an ETF that actually trades the inverse price activity on NVIDIA. So you can buy an ETF that will go up when NVIDIA goes down. Few select stocks have this available out there. NVIDIA is one of them. It's the 1.5, so it's leveraged to the downside, if you will. The ticker symbol is NVDS. It's an inverse ETF. It moves up 1.5% roughly, give or take, for every 1% drop in NVIDIA stock. Not meant to be a long-term position at all due to expenses and slippage. Yeah. They're using different derivatives in this that provide a little bit of price slippage in there. So you don't want to hold this for months and months and months and months. You want to be tactical with it. The other way that you can go more aggressively, but you might consider using an at-the-money option. Intermediate term is what I usually look for. Don't get bumped out of a short position because of a one-day rally of 2%. No. Buy a little bit of time and let the trend play out to your advantage. In this case, I look at the June $180 puts. They're trading around $1,090 per contract. So it feels a little bit pricey, but at the same time, you get that protection to the downside. A move to $165 is going to give you about $1,500 just in intrinsic value alone. So what that means is by the third Friday of June, if the stock is sitting at $165, that option is going to be worth $1,500, and you're paying just a little bit over $1,000 in this case. Now, a move to that $155 target is actually going to give you $2,500 in intrinsic value. If that move were to happen sometime in April, you're going to have time premium that's left in the option, and it's going to be worth more than that. But I like to look at it just as a, what if it's only worth the intrinsic value? And if you don't know about intrinsic value, stick around because we're going to teach you more about options trading here. But that $2,500 gives me a nice return on the $1,090 that I would be paying to get into it. I always like to stress, if you're looking at trading options, make certain that you have the education. They're not meant for all traders out there. Very popular, just a flexible way to manage risk or to help leverage your portfolio with calls, but make certain that you learn about them before you start to trade them. Of course, this isn't any type of financial advice. I don't think I need to state that, but I'm going to make sure I do. Manage all your hedge positions using NVIDIA's price. I pointed out that 185 level. 187 is where I'd give it a stretch. If we break above that, simply say, hey, maybe the stock is now not going to abide those lower lows and lower highs, and it's time to take that hedge position off or wait until we break back down below. That's as simple as it gets. So when I look at NVIDIA, guys, I see a stock that right now, sure, it's still one of the leaders. It's a giant, but we're seeing all kinds of fundamental questions around the stock, whether it is chip demand from China, as they're seeing more production there, or just a little more diversification here in the United States. That trend, as a result, is starting to lead to lower prices. And right now, that $165 level and that $155 level is where I target the price to go over the next month, maybe even 2 months or so. And I'm buying enough time with that option or just holding that inverse ETF. It's a great way to help protect your holdings if you've got NVIDIA. And again, I turn into a buyer at that $155 level based on that long-term bullish chart. Like I said, maybe a few minutes extra. My goodness, 20 minutes, but well worth the time. And I hope that you learned something new. I'm Chris Johnson from Monument Traders Alliance. Make sure you check out the website. Also, like and subscribe for more information like this on other stocks. I look forward to seeing you the next time. Have a great day.